Hello traders, this is day number 6 of small cap market open trading, full position size. Yet another day of no trades, but I do have something interesting to share with you, so stick around if you want to see that. This is the screener right now. The market, well, you know my window for trading is 9:30 to 10:30, so this is the small cap screener. You can see lots of red here. SIGA we were looking at, and I'll show you in just a moment why we were not able to take a trade. If we did, we would have broken our plan. And if you've been trading long enough, you know that if you do that, eventually over time, that's going to lead to big losses. So that's one thing we never ever do, even if, let's say, 9 out of the 10 of our criteria are met, and all we have to do to take a trade is break one little rule, and we take it and it works out. That seems like a great thing in the moment, but over time, it's going to just blow up in your face, basically. And I'll show you exactly what I mean by that in just a moment. So that's the small cap screener. You can see just a ton of red. SIGA is the only thing up above 5% right now. But throughout the day, throughout the trading day, it was not looking so hot. And let's pull it up on the big chart and I'll show you exactly what happened with it. Obviously, it did end up running, but let's see what happened with it and why we weren't able to take a trade. So this is SIGA, and if you look at it on the daily chart, that's really important here. It's up above the 200 MA. It broke out above its previous high. So all of that stuff meets the criteria. But there's one important thing. This blue line here, that is 5% above yesterday's close. Let me show you how that works out and how I figure all that out nice and easily and quickly. So here's SIGA. Here's the previous close. It's 1034. So if we just clear this out here and type in 1034, then I get basically 1086 is the 5% price. And that is part of my trading plan, that I can only take trades on stocks that are up 5%. That's just another thing that shows a sign of strength in the stock. Does that mean that the stock can never give a 3-hour trade or never give winning trades if it's not above 5%? Of course not. But that's what all of our statistical data is based on, is taking entries in stocks that are trading over 5%. So that's what we need to see. And what happened here was SIGA broke out through its previous high at this point, 938, and made a first high of day here. Then a second high of day, that's what this white line is. And you can see all of that happened underneath 5%, that 5% threshold. So that means we cannot take a trade. And let's pretend for a moment that this happened above 5%. What would happen is I would have to look for our first entry that, again, we would not take. I know this is kind of confusing, but it's all written in detail in the trading plan. This would be the first entry. This would be the stop loss, which we expect to fail because all of our data showed us that 75% of the time the first trade fails. So right now what we're doing, instead of taking that trade, is just marking it out. So I was just kind of going through the motions on this one and marking it out. And this would have been our entry, and then you could see we would have got stopped out. So it fit that 75% of the time kind of rule. And then what would have to happen for us to take a trade at this point, it would have to reverse and go straight up through that 5%, pull back, and then give us an entry. And it doesn't do that. It pulls back, and then this would be, actually, yeah, this would be the next entry. So there's actually no way that we could have entered this stock staying within the trading plan because of that 5% level. But again, pretend for a moment that this happened above the 5% level, then this would have been our entry. Our stop loss would have been here, and you could see this thing easily went to 3R. But just because that happened today, just because that happened on this ticker symbol, does not mean that what we're doing is wrong or doesn't work. That's the dangerous trap that every new trader falls into, is that, especially right now when trading is so strange and the market is so bearish and unstable and just everything is out of whack, right now is the time where most new traders are most vulnerable, because you're going to be thinking, well, what I'm doing isn't working. I can't take any trades. I need to change. I need to adapt. And I'm doing air quotes with that because that's such a popular thing to say. And the reason why everyone says that is because they're dying to take trades. Everyone wants to be in a trade. And that's a really dangerous game to play. Of course, when you're a new trader, you want to be trading. It seems fun. It seems exciting. And then after a while, you just have loss after loss, or blow up account after account, and you realize it's not so fun. And then you just decide to come up with some sort of plan, some list of criteria that must be met. And the only way that could ever work is if you stick to it and if you always follow it. If you change it day to day, here and there, then whatever your results are absolutely meaningless, because you cannot duplicate them, you cannot replicate them. So hopefully I got the message across. I know that was quite a long rant, and yeah, this is difficult to see if you're a newer trader, that okay, we could have taken an entry down here. Yes, it would have broken our plan, but look at all of this. Oh wow. But the key thing is that broke the plan, right? So this is just one single trade. We don't care about one single trade. We have over 100 trades worth of data collected showing that we would be up 20 times our risk if we would just follow the trading plan exactly. Not if we break the plan sometimes, right? It's if we follow the plan exactly. So that's what we're going to do. We've been doing it since we started this test, and since we've gone full position size. It's just been unfortunate because of the current market conditions that there's just not a lot of activity. And let's go back to the chart page and we can look at the S&P 500. We'll look at the SPY and see that, you know, things are just not good basically. So here you could see that these are the all-time highs that we had at the beginning of the year, and we've just been pulling back. We're probably somewhere around 25 or 30% away from those now. And the more interesting thing is that we've gone all the way back in time as far as price is concerned to late 2020 now. So right now it is June 2022, so we've lost about a year and a half. This is a year and a half of growth. So yeah, the market is crazy right now. There's not going to be a lot of opportunity for long bias traders, and you guys know that I don't short, and there's so many reasons for that. And what we're going to be doing is I think going to work out really well when the market starts to recover, and that can happen at any time. No one knows, and we'll be ready for it. That's all I can say. So as always, go into every single trade with a plan. Stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.